Hey guys, welcome back to Monday Money Madness, the 3M's baby. You know, this is the latest channel here for financial news. Guys, I'm not gonna go through the calendar this week in terms of key economic events, nothing as juicy as we usually see. Just a few things to note, not like the past couple of weeks where we've seen central bank action, baby. You know, we've been blessed over the last couple of weeks with Bank of England, FOMC, the RBNZ, the RBA, the list goes on. But this week, all it's about is Trump and his beach blonde hair and his pouting and his tan and his billions. And then also him going neck and neck with China. They're going absolutely at it. These are the two huge economic powerhouses of the world. US 1, China 2, the biggest economies in the world going at it with a full-blown trade wars, guys. So Donald Trump did stick to his word and implemented those tariffs on the Chinese goods, and it's sparking so much uncertainty. So let's jump straight into this MMM, baby. Guys, so as I say, this week has started off with an absolute bang in terms of market moves, thanks to these two. Well, really, a thanks, or not really a thanks, but he's creating a lot of volatility in the markets by, obviously, last Friday, he stuck to his word. He did give China that warning. He was like, look, if China do not hurry up and agree a deal with us, I am going to essentially increase and hike those tariffs, okay? Hike those tariffs on Chinese goods. And so did he do. He's more than doubled the tariffs to 25% from 10%. So a real bold move from Trump. But he had the cheek to say on Friday night that, oh, despite these tariffs, we still have a strong relationship with China, strong economic ties. Mate, no you don't. No, you don't. Are you delusional, you madman with your hair? Okay, so anyway, look at the laser beams. The Chinese premier in China have fired back, essentially, at Trump. So they are set to implement, initially, a hike on tariffs targeting around $60 billion of US goods, okay? $60 billion. And there also is suggestions from a political editor, a source, suggesting that China could also scale back and start dumping US treasuries. Why is that big? And I'm going to come on to that in a bit, actually. I'll leave that for a moment. But those are the course of action that they're taking, and there could be more. There could be more. So China really firing back with tariffs of their own, much greater than what the markets were expecting, actually. So $60 billion of goods that they're looking to target. The tariffs at the moment, not confirmed in terms of the percentage, but supposedly between around 5 to 25% at the moment is suggested on the news wires. But in terms of greater markets impacts and also the actual specifics, let's take a look at that. Let's go on to the next slide. So guys, before we jump into some of the reactions and the analysis that we've seen across the markets on these trade wars, wow, it's crazy. I was going crazy today at my desk when I saw gold going up, but we'll get all into that. But I wanted to show you, look, products exported from America to China. You want to see the biggest products that are exported. The number one is aerospace products and parts. Now, China actually specifically said, well, coming from the sources at the moment, we're still waiting for official confirmations to hit the wires and full details, but suggesting that they're going to cut back. I don't know how much, but they're going to cut back their Boeing orders, okay? Aerospace products and parts, okay? Boeing are American aircraft producer. You know, they make planes, etc. For those that don't know, they're the biggest. They're the biggest at what they do. So they're to cut back orders, and that is worth billions, and that could really have an impact there, obviously, on Boeing the stock, and obviously revenue coming in for the country of America. You could take a look at some other agricultures in likes of oil seeds and grains, etc., that China is set to target. But I wanted to show you as well what's really interesting for me outside of the specific products, but the treasury. So let's just take a look at that as well. Now, on to something interesting. Top foreign owners of US national debt, okay? So each country, without going into too much detail, but broadly speaking, you know, countries distribute bonds, okay? They distribute bonds, you know, for a fixed income in which investors, foreign investors, etc., can purchase, right? So it's a way to, a bit of funding and income for a respective country or economy, okay? Now, in terms of the US, with regards to their treasuries, okay, so the treasury bonds, all right, they obviously attract foreign investors, many foreign investors, okay? Now, as I said, it's a form of income for an investment for the country. Now, China are the largest, they're the biggest holder of US treasuries, of US national debt, okay? And the fact is, as I said, sources suggesting that China could cut back, start dropping their US treasury holdings. That is really dangerous. They are essentially, look, frankly, they are #1 US foreign investor. #1! And they said they could scale this back. That's problematic. So that's why the markets have been going berserk today, because it's not just tariffs, China firing back with tariffs. Guys, it's China cutting, potentially, okay, potentially, their investment in the United States. Whoo! Take that one, Donald Trump. So at the moment, as reported in latest figures, according to the US Treasury website, China hold $1.18 trillion worth of treasuries, okay? So that could be a huge blow depending on how much they could scale back, and they have that ready to use in their arsenal if Trump carries on with his games. Okay, guys, so in terms of getting on to market reaction now, all right, with all this madness that we've seen in the markets, Monday money madness, we have seen gold rush. Remember I was speaking about this last week via Instagram, guys? The gold rush. The gold rush has begun. So as I said, we were falling, the price was falling within, or consolidating within this descending wedge structure. But for me, with my laser beam eyes, I saw this as a potential bullish flag. Look at it, that's the pole from November. This is when concerns with China and the US really kicked off on a trade war front. We were rallying, and then we were easing when there was suggestions that, they are making good progress, that both parties. However, now today, breaking out to the upside, above this upper trend line, and a gush of buying pressure coming through as we smash through the 61.8% Fibonacci as well, guys. As I say, targets for 1400, baby. Looking out for, well, ideally it'd be great to see a nice pullback for anyone that's missed out on the entry opportunities before further big push to the north. So just keep an eye on that gold rush. Now, obviously we spoke about gold there and the upside that we're seeing because gold is a safe haven, right? People, when there's times of uncertainty, people put their money into safe havens. Now, relating directly to currencies, JPY, Japanese yen, CHF, Swiss franc, these are safe havens. So we're seeing flows. Look at JPY, look at CHF across the board, guys. On the front foot, so forth throughout today's session. When there's times of market uncertainty, these benefit. Geopolitical concerns, like this is a geopolitical concern, trade wars, US and Iran, geopolitical concern. War threats, if there's any threats of war, like North Korea, they're crazy over there. When US, Donald Trump and Kim Jong-un over in North Korea, when these guys were going at it, who's got the biggest rockets, doing all this testing, that's a war threat. Safe haven flows, we see that. Natural disasters, God forbid. But when we do see natural disasters, tsunamis or, earthquakes, etc., God forbid, once again, when that happens, we see safe haven flows on these 4 points, guys, okay? CHF, JPY, gold, okay? So we've seen these been benefiting today on the front foot. And then lastly, with regards to the market, US stocks, this is the Dow Jones Industrial Average, US 30 the ticker. Guys, remember, I was talking about this last week. We've had this ascending trend line, which has been running since January of this year. Price has been supported. We had these warnings. Look at these wicks below. The full body closure or candles of the body did not close below, but today it is gunning for it. Look at it. It dropped a good chunky drop. Sorry, I couldn't get words out there. It dropped about 800 points or so. And if we do see a daily body closure below that, or the candlestick, boy, as I noted that last week via my Instagram, we could see the price returning to around sort of 24.5K, guys. This huge area of demand, as you can see. We may consolidate a little bit, flirting with that 38.2%, and then there could be another drop, another wave of downside pressure. So keep an eye on that as well. US stocks, of course, going to be impacted by these tariffs, guys. Guys, I hope you enjoyed that Monday Money Madness, baby. It's all about Trump and China at the moment. As you can see, the ripple effect across the markets and the asset classes, big themes to well and truly stay on top on, and so are we doing. We're all over that today. via the Freak Network. So do not hesitate to become a member. Check it out, freaknetwork.io. As a reminder, guys, as well, all these fundamentals that are stored up here, I suck in every day. I'm putting it all into a course for you guys, which will launch at the end of this month. I am KenFX Freak, and this was Freak Network with Monday Money Madness, baby. Skrrr!